Bitcoin is moving again, and traders across the country are paying close attention. After weeks of uncertainty, the price of Bitcoin recently jumped higher, and market watchers say the timing is no accident. The move came right after new inflation data was released, data that many investors read as a sign the economy may be cooling faster than expected. That single report was enough to send buyers rushing back into the market. For months, sentiment around Bitcoin had turned sour. Comment sections on financial videos were filled with warnings that the price would keep falling, maybe even collapse completely. Many small investors had grown fearful, and some had already sold their holdings, expecting worse news ahead. But market analysts often point out something interesting about moments like this. When fear reaches an extreme, it can actually signal that a turning point is near. Markets tend to swing between periods of excessive optimism and excessive pessimism, much like a pendulum. When too many people expect the worst, the conditions are sometimes set for a surprise move in the opposite direction. That is exactly what analysts believe may be happening now. On the price charts, Bitcoin has formed a pattern that traders have watched for decades. It is called an inverse head and shoulders pattern, and it is widely recognized as a signal that a downtrend may be ending and a new upward move may be starting. The pattern forms in 3 stages. First, the price drops to a low point, then it rises slightly before falling even lower, creating a deeper low. Finally, the price rises again and falls to a level similar to the first drop. When connected together, these 3 points create a shape that resembles a head with 2 shoulders, one on each side. According to those who study these patterns closely, the structure often points to a meaningful shift in momentum. When the price breaks above a certain line, known as the neckline, it can confirm that buyers are back in control. That is the exact signal many traders say Bitcoin has just delivered. The excitement is not limited to Bitcoin alone. Other major digital coins are showing similar strength. Ethereum, the second largest cryptocurrency by value, has formed a nearly identical pattern on its own chart, and its price has also been climbing. Solana, another widely followed digital asset, had already been showing strength before this latest move, suggesting that some investors were positioning early. Meanwhile, XRP has broken through a level it's struggled with for a long time, and traders are watching closely to see if that strength continues. Not every coin is following the same path, though. Hyperliquid, a newer digital asset that gained popularity earlier this year, has moved in the opposite direction, breaking down instead of up. Analysts say this kind of divergence is common in crypto markets, where money often shifts from one asset to another rather than moving all at once. Some investors appear to be pulling funds out of weaker coins and placing them into assets showing stronger technical signals. For everyday investors watching from home, this moment carries real weight. Many people had grown discouraged after months of falling prices and negative headlines. This recent shift offers a reminder that markets can change direction quickly, sometimes without much warning. It also highlights why patience and careful observation often matter more than reacting to short-term panic. To understand why so many investors are paying close attention to Bitcoin right now, it helps to look at how professional traders actually study a price chart. This is not guesswork. It follows a set of rules that have been used in financial markets for many years, long before cryptocurrency even existed. The pattern currently forming on Bitcoin's chart, known as an inverse head and shoulders, comes with its own built-in method for setting a price target. Analysts measure the distance between the lowest point of the pattern, called the head, and the neckline above it. That same distance is then added to the point where the price breaks above the neckline. The result becomes the expected target for the move. Based on this method, many chart watchers following Golden Crest Finance's coverage have pointed to a target zone between $71,000 and $71,500 for Bitcoin. Experienced analysts rarely rely on just one signal, though. They often look for what is called confluence, meaning multiple pieces of evidence pointing toward the same conclusion. In this case, when the chart is zoomed out, earlier price highs from past months line up closely with that same target zone. When a calculated target and historical resistance level match up this closely, traders tend to view it as a stronger, more reliable signal. There's also an important rule about how breakouts are confirmed. A single move above the neckline is not always enough. Many analysts wait for a second closing of price above that level before fully trusting the signal. This extra step helps filter out false breakouts, which happen when a price briefly crosses a level and then quickly falls back below it. Another detail worth understanding involves something called a trend line hit count. When a price touches a resistance line for the first time, it usually gets rejected and pulls back. The second and third touches often behave the same way. However, once a price tests the same trend line a fourth time, the odds of a breakout begin rising. Analysts describe this as roughly a 50% chance at the fourth touch, climbing higher with each additional test. By the sixth touch, the probability of a breakout is considered significantly stronger. This idea explains why some coins take longer to break out than others, and why patience is often required before a pattern fully plays out. Right now, current data shows Bitcoin trading near recent highs after last week's inflation report came in cooler than expected. That report played a major role in triggering the latest rally, since lower inflation numbers often lead investors to expect looser financial conditions ahead. And while the report itself does not guarantee future policy changes, market reaction suggests many investors are already positioning as if support for riskier assets like cryptocurrency may be increasing. Ethereum is showing a similar structure on its chart, with analysts placing its target zone between $2,130 and $2,150. Meanwhile, XRP has already confirmed its breakout after multiple tests of resistance, a pattern consistent with the trend line rules described earlier. Solana, by comparison, broke out earlier than the others, suggesting some investors began positioning before this broader rally took shape. It is worth noting that patterns like these are tools for probability, not guarantees. Financial analysts are careful to point out that price action can shift quickly, and unexpected news can change the picture at any time. Still, having clear rules for how a target is calculated and how confirmation is judged gives investors a structured way to evaluate what they are seeing rather than reacting purely on emotion. As Golden Crest Finance continues tracking these developments, viewers are encouraged to watch how Bitcoin behaves near this key resistance zone in the days ahead. That reaction may offer the clearest clue yet about where this market is truly headed. A price move like this rarely stays confined to just one corner of the financial world. And when Bitcoin shifts direction, the effects tend to ripple outward, touching everyday investors, financial institutions, and even broader conversations about the economy. For individual investors, the emotional impact can be just as significant as the financial one. Many smaller investors had grown discouraged after months of declining prices. Some had already sold their holdings at a loss, convinced that further declines were coming. A sudden reversal like this can bring mixed feelings. Some investors feel relief and renewed confidence. Others feel regret, wondering if they exited the market too early. Financial analysts often note that this emotional swing is one of the most common challenges investors face, regardless of experience level. Fear can drive decisions during downturns, just as excitement can drive decisions during rallies, and both can lead to outcomes investors later question. On a broader level, this kind of move also affects how traditional financial institutions view the cryptocurrency market. Over the past few years, more banks, investment firms, and retirement fund managers have slowly increased their exposure to digital assets. A confirmed technical breakout, especially one that lines up with historical resistance levels, can influence how these larger institutions plan their next moves. Some may increase their holdings cautiously. Others may wait for further confirmation before adjusting their strategies. Either way, institutional behavior often has a magnifying effect on price movement, since large purchases or sales can shift market momentum more than smaller individual trades. There are also implications tied to public perception. Cryptocurrency has often been described as a highly volatile and unpredictable market, and for good reason. Sharp rallies followed by steep declines have happened many times throughout its history. When a recovery like this occurs, it can reignite public interest, drawing in new investors who may not fully understand the risks involved. Financial educators frequently caution that enthusiasm during a rally can sometimes overshadow careful research, leading newer investors to enter the market at emotionally driven moments rather than well-informed ones. At the same time, more cautious voices in the financial world urge a balanced perspective. Some analysts point out that a single technical pattern, even a historically reliable one, does not guarantee future performance. Broader economic conditions, interest rate decisions, and global financial developments can all influence whether this rally continues or reverses. Others highlight that inflation data, while encouraging in the short term, represents just one piece of a much larger economic picture. A single report does not confirm a long-term trend, and future data could shift sentiment again. There's also a wider economic conversation tied to moments like this. Cryptocurrency markets are increasingly viewed as an indicator of investor risk appetite. When investors feel confident about the broader economy, they often move money into assets considered higher risk, including digital currencies. When confidence weakens, that same money often flows back into safer investments. In this sense, Bitcoin's recent strength may reflect more than just crypto-specific optimism. It may also reflect broader expectations about where the economy is headed in the coming months. For everyday households, these developments may feel distant, especially for those who do not directly invest in cryptocurrency. However, financial analysts note that shifts like this can still carry indirect relevance, offering a window into how investors are interpreting economic data, inflation trends, and future financial policy. So, where does this leave investors watching from home tonight? That is the question many are asking as they try to decide what to do next. Some are wondering whether now is the time to consider entering the market. Others are asking whether this rally has already run its course. There is no single right answer, and financial analysts are careful to point out that every investor's situation is different, shaped by personal goals, risk tolerance, and financial circumstances. Viewers of Golden Crest Finance are encouraged to think carefully about a few key questions. What would it mean for personal finances if this rally continues in the coming weeks? What would it mean if prices reverse instead? Investors are often reminded that having a plan before a big move happens tends to lead to better decisions than reacting emotionally once it is already underway. Thinking through these possibilities in advance, rather than in the heat of the moment, is something many experienced investors describe as one of the most valuable habits in personal finance. Looking ahead, several important developments could shape where this market goes next. Analysts will be watching closely to see whether Bitcoin can hold above its recent breakout level in the coming days. A strong close above that zone would likely be viewed as a positive sign. A drop back below key support levels, on the other hand, could suggest the rally is losing strength. Similar signals will be watched across Ethereum, Solana, and XRP, since each of these assets is currently testing important levels of its own. Beyond the charts, upcoming economic reports will also play a major role. Future inflation data, employment numbers, and any statements from policymakers could influence investor sentiment in either direction. Since this rally was partly triggered by better than expected inflation data, any new reports in the coming weeks could either reinforce that optimism or challenge it. Financial experts often stress that these broader economic signals can carry just as much weight as technical chart patterns, especially over longer periods of time. For those looking to stay informed, financial analysts generally recommend relying on a combination of credible news sources, official economic reports, and long-term research rather than short-term speculation or social media trends. Understanding both the opportunities and the risks involved in any investment decision remains essential, particularly in a market known for moving quickly and unpredictably. Consulting with a licensed financial professional before making significant investment decisions is also something many analysts continue to recommend, especially for those newer to digital assets. As this story continues to develop, Golden Crest Finance will keep tracking these key levels, upcoming data releases, and shifts in investor sentiment. Markets rarely move in a straight line, and this moment may prove to be just one chapter in a much longer and more complex story. Tonight's developments serve as a reminder that financial markets are shaped by more than numbers on a screen. They reflect human behavior, collective expectations, and the constant push and pull between fear and confidence. Whether this rally marks the beginning of something bigger or simply a pause within a larger uncertain trend remains to be seen. Thank you for spending this time with Golden Crest Finance. Staying informed, staying patient, and thinking carefully before making financial decisions remain some of the most valuable tools any investor can carry forward, no matter what the markets do next. Until next time, take care, and we'll see you back here soon.